Every 4 years, as we vote to elect a new president, investors across the nation will attempt to predict how the election outcome will affect the stock market and ultimately their investment portfolios. As election day approaches, you may find yourself wondering if you should change your investment strategy and how the outcome of the presidential election will affect your retirement savings. While we can't predict the future, we can find some comfort in reviewing past data. Researchers and academics have concluded that there is no definitive correlation between election outcomes and any stock market movements. As proof, this chart compares the average annual returns of the S&P 500 during each election year as well as the year following for the past 90 years. As you can see, there are no systematic return patterns, but for the most part, market returns have been positive during and the year after a presidential election. Looking at the data in another way, this chart shows the growth of $1 invested in the S&P 500 index over 9 decades and 16 presidencies. Again, there are no obvious patterns of long-term stock market performance, and the market has provided positive returns over the long run, regardless of whether we had a Democrat or Republican president. Financial markets are complicated, and there are many variables that can affect market performance. It's important that you remember the President of the United States does not control the stock or bond markets, nor does he or she solely affect the market's performance. The last chart we're going to look at shows how a dollar grew in the global equity market from 1970 to 2019, along with the news headlines that appeared during those times, and the conflicting market reactions. This chart shows us that despite who's in the Oval Office, the impact of uncontrollable events as well as the media can play a huge role in market volatility. The most important takeaway from this CC update is that the stock market has gone up and down under almost every single president, but over the long term, cumulative market performance has trended positive. As difficult as it may be, try to keep politics and investing separate and focus on the things you can control, like how diversified your investments are and how much you're contributing to your retirement savings. As we get closer to Election Day, you are going to see and hear numerous opinions in the media on how the outcome will impact the stock market. Take those opinions with a grain of salt and try to avoid the temptation to make huge changes to your long-term retirement savings strategy, as this could be especially harmful to your retirement savings. Remember, long-term investment strategies are designed to outlast multiple presidential terms and any one certain election or political party.